So everybody, this is Ryan Haley with Atlantic Shores Sotheby's International Realty. And today I wanted to give us an update or allow us to speak with somebody here locally who does a great job when it comes to financing, and allow her to give us an update on the state of mortgage financing and what changes we have seen and may be seeing here in the near future. So I'm excited to introduce you all to Kari, who is the branch manager of First Home Mortgage here in Ocean City. So thanks for joining us, Kari.
Hi, everybody. Thanks for having me, Ryan. I appreciate it.
No, it's my pleasure. Thank you so much. You do a great job when it comes to finance. You've done a great job for our clients over the years. I've known you for a long time. You know, we obviously have some history.
Long time.
Working at Phillips Crab House back in the day. So yeah, I know you've been in this business a long time. So we appreciate you taking time out of your day to give us an update here. I figured I would start out with the primary residences and the second home, vacation home properties here locally in Worcester, Wycomico, Sussex County. Excuse me. What changes have we seen? How are things going for that market right now?
So I've definitely seen a slowdown of activity, especially with the second homes. And I think that's just because there's so much uncertainty with people when it comes to their jobs or if they're self-employed and how their businesses are going to go. Not to mention the fact that a lot of them use their brokerage accounts for down payment, and they've seen, quite a dip in their money, and they were planning on using that. So definitely a lot of people trying to get out of contracts that they were in, unfortunately, and kind of putting a hold on their beach home, their beach home, event that they wanted to do. Having said that, all of them are very, very hopeful about being back with us very soon. Meaning everybody who has put something on hold is like, you guys have been great, and we were so excited about this, and we're still going to do it. We just need to get through the uncertainty, and we'll be right back there with you. So I'm kind of hopeful that when the pandemic ends, that we'll actually have a flood of people who are just excited and like have a breath of fresh air and really just want to get back to normal and what they were doing and their plans. And actually, if anything, after being in the house for all that time and really understanding the value and importance of being able to go to the beach and enjoying time with their family and be outside and do all of those fun things, part of me thinks they won't want to put it on hold.
Yeah. It's definitely interesting, and I agree with you. I think that there's the typical spring market that we see, which is normally right now their busiest time, and in comparing that with what I'm seeing from some of the economists and financial people out there, it does seem like we might be in a bit of a pause here, obviously, which is understandable. But coming out the other end, that there could be, instead of having a normal spring market, the spring market could be more like July, August, September.
I was thinking the same thing. I mean, I feel like people are going to be, oh my gosh, I'm so happy to be able to be out with a group of people for 4th of July and having a picnic and grilling out and doing all of those things. And I think they're going to want to have the home and do the cookouts and have everybody over. And I think that because of everything they've suffered through, they're going to be looking for those like silver linings and excited to get back to some normalcy.
Yeah. So when it comes to financing right now, if we have a buyer right now who either needs to do something, or they're looking at opportunities that currently might be in the marketplace, what are you seeing as far as rates and any guideline changes?
So for a first-time home buyer, it's a great time if you can dive in and feel comfortable in your position with your job and everything to go ahead and do it, because interest rates are at an all-time low on the government loans. The guidelines have gotten, more strict for those particular loan programs with the governments. A lot of our investors have gone to a 660 credit score. We do still have investors who allow for 640. So we're kind of fortunate being a correspondent lender that we work with so many different investors. And by investors, for those of you who aren't familiar, I'm referring to, we correspond with SunTrust, Wells Fargo, BB&T, like all of the big banks. So if one of them, for example, comes to us and say, we don't want a loan over 660, but we still have 3 banks that are doing 640, we're still able to do that, which is kind of nice. But there are several investors that are kind of tightening the reins just because especially with the talk of people doing forbearance and whatnot, the uncertainty within the bank of, are we getting our checks in the mail this month? Are people making their mortgage payments? What's our liquidity going to look like? Liquidity meaning we had this much money available to us in hard times and now it's kind of dwindling. So, and you're not having those mortgage payments come in for a lot of people. So you want to make sure that the loans you do have coming in are going to perform. So there are some tightening of things in that nature. And then the other issue that we're running into is just that people who have either been, let's say, laid off, or maybe like they were huge overtime workers and now they're down to bare minimum hours. So just really analyzing from a lending standpoint what their job security is. And then we're also, you know, verifying their income right up to the day of closing, meaning calling the employer, have you laid them off or are they still there? That sort of thing.
All the way up till closing.
Yeah. Mm-hmm.
Okay. What about timelines, turn times here? You know, if you have you were just talking a minute ago about first-time home buyers and some of those government loans, USDA being a big one that we see sometimes down here.
We got one back in 4 hours yesterday from USDA.
Okay.
So turn times have not yet been affected by that, which is great. But I think a lot of that has to do with how few people are purchasing right now. There's a lot of people refinancing, not as many purchases going on. So it's not like there's a huge stack of files to go through at the moment.
Got it. Okay. So here in Ocean City, we obviously deal with a lot of second homes, vacation homes, and I remember back in 2008, 2009, 2010, the financing guidelines were changing a lot, and some months you could put a little bit less down, and then it got more restrictive. What are you seeing today if somebody wants to buy a second home condo here in Ocean City? Minimum amount down, has that changed at all? And what is that?
Yeah. So we're still on the 10% down train as far as vacation homes are concerned. What has changed is reserves are a much bigger deal right now. It's imperative that you have some more money in the bank, meaning that if you need $50,000 at closing, we can't have a bank statement that shows that you've got only 52. You know, like we need some other account to show that if crisis were to occur, of course, as a lender, we want to make sure that there's somewhere you can tap into if you need to make a mortgage payment, you know, and that you're not just living in this world of kind of like paycheck to paycheck sort of thing. So the reserves are pretty big. And then just credit score requirements, you know, that's the other one. And that's not specific. So I can't say, here's the minimum credit score, because like I said, we're correspondent. And so Fannie and Freddie, they have their own criteria, but then what happens is each investor has their own overlays, right? About what they feel comfortable with and what they're willing to buy from us. So if Fannie and Freddie say we're okay with 620, that doesn't mean BB&T is okay with 620. Do you know what I mean? So they'll step in and say, that's fine and dandy, but we're not buying anything underneath the 680. So because of that, you know, it's variable. So I can't really be very specific, but we're definitely doing 10%. I just registered one yesterday, actually.
Okay. So with the
for conforming, by the way, jumbo's a different ballgame.
Got it. I want to ask you about that here in a minute. But while we're still on the second homes here, 401ks, IRAs, those are all accounts that people could use to verify that they have reserves?
Absolutely. We love those accounts. Yeah.
Okay. What about, and I think it might be a little early on with this, but what about the condo approval aspect of buying, say, a second home condo? You know, normally when you buy a second home condo, you have to get approved as the borrower, but then obviously you're also reviewing the condo association to make sure that they're in good standing and approving the condo at the same time to allow the buyer to ultimately purchase the property. But have you seen any changes in that condo approval aspect?
There has not been any changes in guidelines for condo approval. The only thing that I am noticing is that, keep in mind, any of your management companies, for the most part, they're working from home, you know, insurance companies working from home. So the only thing that I have noticed is I really have to jump right on it day one when I get a loan in right now, because as much as everybody wants to feel like they're working the same hours or doing things just as quickly at home, not necessarily the case. Like I feel a little bit of lag time sometimes getting things back.
Yeah, absolutely. Okay.
And it's not like I'm driving a check to the management company like I would and dropping it off. You know, it's like you got to put it in the mail and it has to go to, you know, and then they have to go check their mail. And then, so it's just a little bit of time in there.
Understood. So you started to touch on this, the jumbo market. So jumbo financing. I guess maybe first off, if you could tell us what that jumbo limit is or where it starts as far as a loan amount, and then has there been changes to that? What do we see?
So it's the 514 in Worcester County, and as far as the changes are concerned, that's really that we've got so many investors that have gotten out of the jumbo game. It's just too risky right now with them feeling like they have to hold these notes and people making their payments, because, you know, those are usually obviously pretty big ticket items as far as the monthly mortgage payments concerned. And even folks who are used to making lots of money, attorneys, doctors, etc., their businesses are all suffering as well. And so it's concerning from a lender standpoint about somebody taking on, let's say, an $800,000 mortgage. So because of that, a lot of our investors have gotten out of the jumbo game. We went from somewhere around 10 investors down to 4. Having said that, it has concerned me to see that many lenders are saying on, you know, Facebook or wherever, social media, that there's no jumbo money to be had, or that, you know, nobody's doing jumbo loans, because that's not a true case. Their particular bank might not be doing jumbo loans, but we still have investors who are doing them. Expect that the interest rate is going to be dramatically higher on a jumbo than a conventional loan right now, just because it is very risky.
Yeah. Okay. Is there any alternatives to jumbo financing that you might be able to do, whether it's a first and a home equity line or?
I would definitely be looking at first and second mortgages, especially if you're looking at something that's not going to make the second mortgage a crazy mortgage, meaning like you're looking to borrow 600 or 650. It would make sense to pair it into a first and a second. The reason I say that is because home equities obviously are a variable interest rate now. It's based off prime, which is great because right now prime doesn't exist, so it's nice and low. But as time moves on and the world recovers, that rate will start to go up, and therefore that second mortgage payment is going to change with that. Having said that, pairing a first and a second right now and getting your first mortgage, you know, at the low 3s or mid 3s, a lot better than taking on 650 at, let's say, 5% on a jumbo loan.
Yeah. Okay, that makes sense. And then just, I guess, overall mortgage rates, since there's been so much volatility in the last, you know, however long we've been in this now, 30, 40 days. I think there's been some good news. You mentioned off camera here that there was some good news in terms of rates here just recently. Is that correct?
Absolutely. So I would say it hasn't really been 40 days. Gosh, crazy. But in that amount of time, like, so let's say, I guess it's been about a month or so, rates had really come down right before the lockdowns and all of that kind of craziness ensued. And I maybe fielded calls from, let's say, a couple hundred folks who were looking to refinance. And within 24 hours, rates had skyrocketed. I mean, when they called me, I was maybe at like 3.25, and all of a sudden I was offering them like 4.5. And they're like, oh, well, that doesn't do anything for me because I'm already at 4. So I kept a list of all of those people, and I kept waiting for the day when things would calm down and hopefully rates would come back down, and that I'd be able to reach out to each of them. And yesterday was definitely that day. I was quoting some folks like 2.625 on a 15-year note yesterday. So things are definitely settling in the mortgage world. It had gotten, I think I told you, Ryan, just it's volatile no matter what. So if you're interested in doing financing, you kind of have to commit like right away. Like if you call me, ask me to quote you a rate, know that it's good the moment I'm on the phone with you, and 10 minutes later, I cannot guarantee. But it is good to see that things are calming down. And the reason, you know, behind all of the hikes of rates, as you and I were discussing, Ryan, is just all the uncertainty. I mean, you've got the government saying you can do forbearance and not make mortgage payments. And the banks are like, oh my God, well, what's that going to mean to us? Because we at First Home, we might sell a loan to SunTrust. And SunTrust, if those payments don't get paid the first 3 months, they can come back to First Home and say, you have to buy that loan back. So now we're paranoid. What if we close a loan and then we sell it to an investor and then the person decides to do forbearance? Now we have to buy back all these loans. So there was just a lot of uncertainty that made basically banks feel uncomfortable lending. So they jacked up their interest rates so that the applications would slow to give us time basically to feel out what was really going to be happening.
Got it. So you've mentioned this a few times for people who don't know exactly what it means or have heard the term used here, whether it might be by their local government or on the news somewhere. Explain what you can about forbearance. What is forbearance? What should they know about it, and what should they be concerned about?
So the biggest thing is to understand that each bank is trying to figure it out themselves. And we're all getting a little bit further with it each day. But when the stimulus package and whatnot came out last week, there was a lot of vagueness and then a lot of uncertainty. And each lender is going to kind of view it and adhere to it how they see it, if that makes sense. But basically it was, forgiveness of being able to make your mortgage payment over the next few months. But at the end of those few months, from everything we've read and the literature I've gotten, those payments are all due. And my concern is the folks who feel great right now about making a mortgage payment, but if you already after 40 days can't make a mortgage payment, how are you going to make 4 a few months from now at one time? So, and then from what I understand, when the forbearance period's over, you have to go to your specific bank, so SunTrust, Wells Fargo, BB&T, whomever, and you have to ask them what your options are as to paying that money back if you don't want to pay all 4 payments at a time. So I'm just begging my clients who keep calling me about forbearance to call their specific investor, because usually First Home Mortgage, we sell off a lot of our loans, right? So if you got your loan with me, it doesn't mean it's still with me. It might be SunTrust or Wells or whomever. And just call your specific bank and say, hey, if I do skip these mortgage payments, what are my options going to be at the end? Because some of them will work with you. They'll put it on the back end, great, or maybe increase your payments for a while until you've paid it back, or different options. But you want to know that that is an option and that you're not going to end up in this balloon situation. Because some of them will say, well, you need to prove to us that really you couldn't have afforded to make those 3 payments in the first place. Because let's face it, there are certain people who are going to take advantage just to take advantage. Or say, you know what, I've got plenty of money in the bank, but I'm still going to do this because I don't know what the next 3 months hold. And then you've got a bank who's like, wait a minute, you still were making plenty of money. You could have made your mortgage payment, and they might not be willing to work with you. So it's just really important to make the phone call and know upfront what the end result's going to be.
Yeah, I think that's great advice. There's so much news, so much media, so much social media out there.
Yeah.
Unbelievable. You and I were both in this back in 2008 and in 2009, but the information surely was not coming at us like it is today with all the social media.
Yeah.
And people have to, everybody, whether it's with regard to this or other government, stimulus type things, you got to be careful as to, what you decide to do just based on what you heard somewhere.
Absolutely. And I'm not saying that there's not plenty of people who need that forbearance, and it's a good thing, and that it doesn't make complete and total sense for them. It's just smart to make the phone calls and do your homework so that you don't end up in a worse position later.
It's perfect. Well, that's great. I know you're busy. I know you got those 100 or so people that you called yesterday to try to take advantage of this great rate. So I don't want to take up too much more of your time. But I really appreciate you taking your time to talk with us and educate us as to some things that we need to be thinking about, or a consumer needs to be thinking about when it comes to buying property. I will say, I'm keeping my eye on the real estate market every day, and one thing I looked at just today, here at the beach markets, which is your Worcester, Wycomico, Sussex counties, in the last 3 days, there's been 91 new listings. 57 have gone under contract and 86
Wow.
closed transactions. So it's obviously not at the levels that we would expect to see for this time of year, but there is still movement. So we're definitely encouraged by that.
That's great.
Yeah. So once again, Kari, thank you so much. If anybody needs more advice with regard to financing, what's the best way to reach you?
Cell phone right now is definitely the best way, which is 443-614-6286.
6286.
Mm-hmm.
Great.
Got it.
Thank you so
All
much.
right. Happy Easter, everyone. Have a good weekend.
Thank you. We'll talk
Bye.
to you soon.
Bye.